Hello ladies and gentlemen, welcome to another video from Swaraj Finance. Before I begin, just a reminder of our disclaimer that nothing you see in this video should be taken as investment advice. You must do your own due diligence before taking any investment decisions of your own. So today we're going to go through the commodity space. It's been another volatile week in the commodities markets, and at Swaraj Finance, we're very much of the opinion that we're in a commodities upcycle in the long term, and within that upcycle you can have interim volatility, which is only natural and which we would expect. So there's for more reasons that I can get into in this video, we have high conviction in the commodities trade over the next decade. But I just wanted to go through some of the individual commodities and take a look at the action that we've been seeing, price action. So we've got gold first, and as you can see, I've pulled it up on the weekly candlesticks. So you can see we have a nice flag formation, parallel price channel using the weekly candlesticks. And we had a breakout in March earlier this year. We retested at the beginning of May the all-time high, which was hit in a year earlier, March 2022, and in August of 2020. So it's a triple top formation that we formed, and since then we've pulled back, and we're currently retesting the price channel on the weekly chart. We also did a retest on the daily charts back here in at the end of May. We broke down through that, and now we're testing the weekly patterns and structures that we see on the chart. And also, if you look, we have this rising price channel which goes back to the lows in October of last year. And so at the price where we currently closed the week, around 1920 on gold, we have a double support that on the weekly structure, which goes back a few years, this pattern, and we have over the last 6 months this rising channel which provides a upward support also at the same point. So we have quite a strong level of support here, and I would expect to find that we do turn and continue upwards, and then eventually break through the 2080, 2075 level, more or less. That's what I would expect. However, in the case of a liquidity crisis, some kind of broader market event, then we could potentially see gold in the worst case scenario break back down into the price channel, and that would mean that we have instead of a channel we'll be forming a new megaphone pattern where the extremes get wider. So we're making higher highs, and we could potentially make a lower low sometime later this year or early next year in gold. But given how cheap the precious metals equities look, it's hard to envision them going much lower, and I do see the dollar probably heading down, which means that precious metals and commodities more broadly will be heading up. So that's the more likelihood, but it's always good to look at the downside, the bear case, which could see us all the way back down to 1600 in a very rare, probably not very likely scenario, but it's a possibility. But as I said before, double support where we are, so I think we're going to see a turn up and probably breaking out to new all-time highs by the end of this year or early next year, potentially. So it'll be a similar chart looking at silver. And for silver, it's more volatile, so we've broken back down into the parallel channel, And we have a strong level of support coming up around just below $22. So silver could go slightly lower, but it would probably find support around 21.85, so somewhere around there. And then again with gold, eventually I see it breaking out and moving onwards and upwards in this rising price channel. You also have this red arc, which is a strong level of support now below the price, and this is an arc which goes back as you can see. It's a big arc which goes back more than 10 years, and so I do see this arc structure holding, and we're fairly close, so I think there's strong support below the silver price as well, both indicating that we're going onwards and upwards. So we're going to take a look at the Dixie, which is the dollar index, to look at the strength of the dollar relative to other currencies. And as you can see, the trend within this rising price channel, the trend for the dollar is now probably to come back down and test the lower level of this channel, and that would coincide with the breakout of the commodities that we're expecting. So and this is a move which would potentially take, if you look at the highs on this channel, it tends to take a couple of years to hit the lows of the channel again. So the dollar would support that theory as well, our projections for the future. We'll take a look at oil. And as you can see on the oil chart, there's various trend lines in play here. So we've had this descending trend, which you see in the red line, which we broke out of, and we're currently back testing that trend line. So this red line that you see here could act as support. However, you can see these large red candlesticks. We had a very big tail at the end of the first quarter of this year in March, indicating strong support and potentially a move onwards and upwards. But since then, the price action has not looked great. So when you have such large red candlesticks, it means that people are worried about this potential recession coming up, and so they're selling oil, regardless of the supply-demand fundamentals in the oil space. And so I could potentially see us squeezing into this corner between the blue trend line and the red trend line, and then eventually breaking down to test the blue price channel, which is a 100-year, almost 100-year price channel. So we're coming to a crucial time for oil, and we could see, as indicated by the strong selling pressure that we're seeing in oil, a breakdown to, and you'd have this double support now at around the $55 level on oil, and that would be probably the low point in the oil price that we would see then for the next 5 years or so, and then I think it would continue onwards and upwards. So potentially more downside on the oil, but as I said, we're still sitting on this red trend line, which could, I think it's a low probability, however, to be honest, it could hold as support and we could break out to the upside. More likely, given the strong selling pressure, I would see a downward move to around $55, $56 on the oil price. And so potentially a good entry point coming in for a lot of the oil stocks. For those that might be interested, you can take a look at our website. We have a model portfolio of equities that we favor across the commodity space, including energy. We handpick some stocks that we feel will perform very well in the energy space. So that's oil. if we take a look at natural gas, you can see natural gas following the Ukraine invasion by Russia had a huge spike in the middle of last year, and then we've pulled very rapidly and drastically back to form a new low, probably where we were around $2, just above $2, and now we're seeing strong green candlesticks coming in, so buying pressure is entering the market. I don't think the energy crisis has been solved by any stretch of the imagination, and so come winter I think we could see gas spike up again, probably initially to around the $5 level, which would see a 50% retracement from where we were near $10 late last year. So yeah, that's why I expect this winter. Then we'll have some pullback, and probably follow the next year we could go up and maybe set another high for this current cycle. But I do see a target of probably around $5 probably coming up this winter or early next year. So we'll take a look at copper perhaps before finishing. Copper, again, you have a kind of arch formation like we have in silver. We're in an upward trend. We potentially formed a low in October of last year along with the precious metals, and we could yet see copper pull back and form a double low here at around the $3.3 per pound, touch this arch potentially and then move on. So copper, I don't see too much downside, but we could come back a little bit further. We also have a trend line. It's not drawn in here, but if we join the lows from April 2020 to November 2022 to where we are now, we also have a trend line there. So there's some support which could see that we go higher, but I do expect that we might have to come back and test this arc, this red arc line. So that's copper. That's most of the commodities that I wanted to cover today. This interim volatility, I will add, is to be expected in a commodities, a long-term commodities upcycle. It should be looked upon as an opportunity to increase your positions in the companies that you like across the various sectors of the commodities markets. And don't worry, you can see large moves downwards in some of the stocks that you might hold, but these are merely accumulation zones in our opinion. And if you have the kind of conviction that we have in the thesis of a long-term upward cycle in the commodity space, then you just look at these as great opportunities to buy more of the stocks that you like at discount prices. Volatility is not something to be feared; it's something to capitalize upon. Volatility is your friend, really, because that's what makes you profits on the upside, and that's what gives you buying opportunities on the downside. And so volatility is really what makes the markets so profitable for investors who know how to take advantage of the opportunities. So I just wanted to mention that because emotionally, if you see the big swings in price and you see you bought something in an upward cycle, in a short-term upward tick in the commodities, and then you have to ride it down a little bit. You could be riding it down 30-40% in some stocks. Not to worry, these things happen. You should just be looking to accumulate in such zones as we do at Swaraj Finance. So I hope that's useful for some of you. Do take a look at our website if you're interested in having some kind of guidance and having a look at the model portfolio that we have. We share our opinions on stocks, and you can sign up for, we currently have a discount, so you can sign up for, get the first month for half price. So do take a look at our website. Otherwise, we'll see you again for another video fairly soon. In the meantime, do like and subscribe to the channels, like the video, share it with anyone who might be interested, and take care. Thank you. Bye.